Hello, friends. If you're 65 or older and you own your home in Canada, there's up to $3,000 sitting in a tax credit the CRA will never phone you about. It's called the Home Accessibility Tax Credit. Stay with me to number 6, because that's the one almost everyone gets completely backwards, and it's the reason the seniors who need this money most often get nothing. Number 1. The credit itself, and the real number. The Home Accessibility Tax Credit lets an eligible person claim renovation work that makes a home safer or easier to move around in. Since 2022, the limit doubled. You can claim up to $20,000 of eligible work each year, and the credit is 15% of that. 15% of $20,000 is $3,000 back on your return. Even a modest job, say $10,000 for a walk-in shower and grab bars, hands you $1,500. Spend the full $20,000 on a bathroom gut and rebuild and a stair lift, and you collect the entire $3,000. To qualify, you must be 65 or older by December 31st of the tax year, or eligible for the disability tax credit, and it has to be your principal residence in Canada. Here's the mistake that costs people the whole amount. They assume it's automatic. It is not. Service Canada does not track your renovations, and the CRA will not add it for you. You claim it yourself on line 31,285, and if you don't, the money simply never comes. One senior in Ontario spent $11,000 widening doorways for a walker, never filed the credit, and left about $1,600 on the table. Gone, because nobody told him the line existed. And you can't fix it forever. The CRA only lets you go back and adjust a return about 10 years, so a credit forgotten today can eventually expire for good. So if you did accessibility work this year, that expense goes on line 31,285, and you keep every invoice with the contractor's name, address, and GST number for at least 6 years in case the CRA asks to see them. Number 2, what actually counts? Because this is where thousands quietly disappear. People hear accessibility and picture wheelchair ramps and hospital equipment. Wrong. The credit covers any permanent renovation that helps you move around your home more safely or lowers the risk of a fall or injury. That means grab bars in the bathroom, walk-in tubs and curbless showers, non-slip flooring, lever door handles instead of round knobs, widening a hallway or a doorway, lowering countertops and cabinets so you can reach them from a chair, building a ramp or adding a stair lift. And a stair lift alone runs $3,000 to $5,000 installed, so that one item can be worth $400 to $750 back by itself. Now the error that burns people: purely cosmetic upgrades do not qualify. Fresh paint, decorative tile, a fancier vanity you chose for looks. The CRA will reject those. The work has to be permanent and tied to safety or mobility, not style. The second trap is doing the job under the table for cash with no paperwork. If you can't produce an invoice, you can't claim a cent, no matter how legitimate the work was. One couple in Alberta paid a handyman $4,000 cash for a walk-in tub, got no receipt, and lost a $600 credit they had every right to. So before you sign anything, get a proper written invoice with the contractor's business number on it. A contractor charging GST or HST must legally have that 9-digit number. If a renovation makes your home safer to live in as you age, assume it might qualify, then confirm it against the CRA's eligible expense list before you file. Number 3. And quick reminder, number 6 is the one almost everyone gets backwards, so don't leave before it. Now here's the part that doubles your money and almost nobody uses. You can stack a provincial credit on top of the federal one for the very same renovation. In British Columbia, seniors 65 and older can claim 10% of up to $10,000. That's another $1,000, and it's refundable, meaning you get it even if you owe no tax. New Brunswick has its own seniors home renovation tax credit, also refundable, worth 10% of up to $10,000, so up to $1,000 a year. Saskatchewan lets seniors claim a higher limit, up to $6,000 of expenses for the 2025 and 2026 tax years, for a few $100s more. Here's what people get wrong. They think claiming the federal credit blocks the provincial one. It does not. The same walk-in shower can be claimed federally at 15% and provincially on top. ABC Senior doing a $10,000 bathroom could collect $1,500 federally and $1,000 provincially, $2,500 on one job. Skip the provincial claim and you've handed the government that extra $1,000 for nothing. One warning: Ontario no longer runs a broad seniors renovation tax credit. Its temporary version ended after 2022, so Ontario viewers lean on the federal one and the Ontario Renovates program instead. Your step: check whether your province runs a seniors renovation credit. BC, New Brunswick, and Saskatchewan all do right now, and claim it alongside the federal one on the same expenses. Number 4. The $7,500 credit for families, and this one is refundable. It's called the Multigenerational Home Renovation Tax Credit, and it's aimed squarely at aging parents. If your family builds a self-contained secondary suite so a senior 65 or older can move in and live independently, you can claim 15% of up to $50,000 of construction costs, up to $7,500. Because it's refundable, the money comes even if the household owes no income tax at all. But the suite has to be genuinely self-contained. Its own entrance, a kitchen or kitchenette, a bathroom, and a sleeping area. A finished basement apartment for a parent qualifies. A spare bedroom with a hot plate does not. Here's the catch that costs people everything. It's a once-in-a-lifetime claim for each qualifying senior. You get it one time, so you don't want to burn it on a half measure or file it sloppily. Picture a family that spends $30,000 finishing a basement suite for grandma and files it right. That's a straight $4,500 back. The other common mistake is not learning the credit exists until after the build, when the receipts are scattered and the paperwork is impossible to reconstruct. So if your family is even thinking about moving a parent in, plan the credit before the first wall goes up. Keep every contractor invoice. Note the renovation period runs a single tax year, and claim it on line 45355. $7,500. Refundable is the difference between a suite that strains the family budget and one that pays for a real part of itself. Number 5. The new 2026 rule that can quietly shrink your refund. For years, seniors could claim the same renovation under both the Home Accessibility Tax Credit and the Medical Expense Tax Credit. The same walk-in tub counted twice, once for accessibility and once as a medical expense. That double claim is over. Starting with the 2026 tax season, the federal government closed the loophole. You now have to choose which credit a given expense goes under, and you cannot run the same dollar through both. Here's where people lose money. They either don't know the rule changed and get reassessed months later, or they pick the wrong credit and leave savings behind. The two work differently. The Home Accessibility Credit gives you 15% flat on the eligible amount. The Medical Expense Credit only counts the portion above a threshold, roughly the lesser of a set dollar figure, around $2,800, or 3% of your net income. So a senior with $25,000 of net income clears the 3% bar at just $750, and the medical route can return more. For a higher income senior, the accessibility credit clearly wins. The action step: run the same expense both ways before you file, or have a tax preparer do it and claim it under whichever gives the bigger number. Don't guess. On a $10,000 renovation, choosing wrong can mean a few $100s less in your pocket. And once you file, that choice is locked in for that expense. Number 6. The one almost everyone gets completely backwards, and it's the most important minute of this video. The federal Home Accessibility Tax Credit is non-refundable. That single word changes everything. Non-refundable means it can only cancel out tax you actually owe. It can never turn into a check. So if your income is low enough that you already pay little or no income tax, that $3,000 credit is worth exactly zero to you. Read that again, because it's the opposite of what people assume. The lowest income seniors, the ones who need the help most, often get nothing from this credit. Take a senior living on the Guaranteed Income Supplement who owes no federal tax. File the $1,500 claim and it converts to nothing. Here's how people in the know get around it. First, if you have a spouse or common law partner with taxable income, they can claim the credit instead. The rules let it move between you, so the dollars land where there's actually tax to cancel. Second, you lean on the refundable credits we covered. The BC and New Brunswick Provincial credits and the Multigenerational credit all pay out even when you owe no tax. That's the backwards part. For a low-income senior, the refundable provincial and family credits can be worth far more than the headline federal one. So before you assume you're getting $1,500 back, check one thing. Do you actually owe enough tax to use it? If not, put the claim in your spouse's hands, or steer the work toward the refundable credits instead. So here's your one step this week. Pull out every renovation receipt from this year and check whether the work made your home safer or easier to move around in. If it did, that money belongs on your return. Federally, online $31,285, provincially if your province offers it, and on the family credit if there's a suite for a parent. If this helped you, subscribe and share it with someone over 65. The ones who find out in time keep the money.